Good morning, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Tuesday morning, January 28th. We're looking at the market profile of the SPY ETF, and a lot happened yesterday. Missed the entire day, and boy, a lot happened. So let's get to what transpired yesterday. First, we have to go back to what I started talking about, I guess about a week and a half, 2 weeks ago, when I said all the market structures on the long term, monthly and weekly, were healthy, but I thought the daily was getting a bit stretched out. And the reason I said that is because there were some vacuums or voids, whatever words you want to use, down below. And yesterday, they took care of just about all of them. I said we had a vacuum down to around the 325 level, and then again down to around the 322 level. Well, lo and behold, we got right down to 322.66, 2 cents above an afternoon pullback low from January 7th, and 40 cents right above the last daily low I was talking about, around the 322 level. Remember, you may be sick of hearing me say this, but it's important. Price, just like water, will seek its level. And that's exactly what it did yesterday. It repaired a lot of poor structure where there was some tremendous voids, and it took them out. So, first things first. Good news, bad news for the buyers, for the bulls. Let's talk about good news. Yes, we had a tremendous gap yesterday. That's still holding. But on a day that was down so much, and now I'm going to just expand yesterday's, we never tested the opening. You know how rare that is to have a gap that large, open, go down a little bit, drive up, and then the next 12 time frames never came close to taking out the opening. Now, when I was a specialist and we had to make a market, that would have been basically like a perfect game in baseball. Because when we open a stock down that far, we're going to be loading up because that was our job at the time. So we basically bought a tremendous amount of stock at the low of the day. Nice trade that would have been. That is very rare. To gap lower, have a day down as much as we did, and not go below the opening again, very rare. So that's one positive for the bulls. Second positive, they had a pretty wide POC at the upper end of the range. That's positive. Third positive, for 3 hours or 6 time frames, they got above the initial balance high. Pretty positive on a very negative day. Now, yes, they did give it up in L&M, but once again, all that is, for my money, are week longs just puking out at the end of the day. Remember, M period's going to do, if you have a specific trend for the day, and yesterday's trend, even though we didn't take out the low anymore, the trend was down, right? The market was down. Well, odds are then M is going to get weak buys to flush out. Same thing, when the market's up, you're going to get shorts that cover. And that's why M acts as erratically as it does sometimes. So those are the positives for the bulls. Now, there were definitely negatives. We have a large gap from yesterday that, incredibly, right now we're trying to get into, with just about an hour to go before the opening. So that's a negative. We have a large gap. The odds of that gap getting filled the first time are going to be slim. Okay? That's number one. Number two, the monthly is still very healthy, one time framing up, but the weekly is now in balance and you have a gap. Okay? So you went from one time framing up in the weekly to balance with a gap. And also, obviously, you have a gap on the downside on the daily. So there's both positives and negatives to take out of yesterday if you're on either side of the camp. All right, so let's go over destinations and then what to look for today. Now, our destinations are pretty far and wide apart, so you're going to get, I think, some really good chop and a lot of opportunities today. And also, one other positive thing yesterday for a day, there wasn't even, from what I see, now I went over, there was no trend. There wasn't even an opportunity for a trend day on the downside yesterday. So those are positive things. Okay. So for the upside, initially the first destination was going to be the POC, but now that looks like it's going to be a downside destination. So I'm going to still use yesterday's high since it's just an hour to go prior to the opening of 325.12. And then above that, it's filling the gap at 327.36. So we have a 224 point gap. The odds of that getting filled are slim today. Now, it doesn't mean it can't happen, but they're slim. If you are to fill that gap, whether it's today, tomorrow, or whenever, then you don't have anything until the afternoon rally high from January 24th of 329.26. Remember, we had a tremendous trend day down, okay? And we had an outside day down. Listen, what happened yesterday, you can't be caught by surprise by it. There were telltale signs. We had excess at the all-time high. Now, the next day we gapped lower, but then you had those mindless machines take it up, both late on the 23rd and gap higher on the 24th. However, we never took out the high, so the excess stayed, and we ended with a trend day down and an outside day down. So can you really be surprised that they did this yesterday? You really can't. The signs were there. So I'm just going to leave it at that 329.26 afternoon rally high. And then we have 4 sets of single prints from the 24th up above. Okay, for the downside. First one now we're going to use is yesterday's 10 wide at 324.51. Then until we get more market generated information, we don't have anything to yesterday's low of 322.66. Then below that we have 322.64 afternoon pullback low from the 7th, 322.24 daily low, 322.14 afternoon pullback low from the 6th. Single prints of 321.88 getting filled to 321.75 from the 6th. And then 2 very important numbers. 320.36 monthly low. Weekly low. It will be this month's low if we don't get below it. Let me just make sure of that. Yep, it will be this month's low if we don't get below it over the next 4 days. Then 320.15, another weekly low. Why are those important? Well, just because the way I said 325 and 322 were levels where there were voids. If we didn't hold this 322 level yesterday, well, then again, you have a void down to that 320 level. And if you don't hold that, then you have that weekly gap down around the 319 and change level. So those are important levels. Okay, game plan for this morning. Well, right now, the question is that all the sellers wanted to do yesterday? Now, the volume was good. It was 84 million. Obviously, it was good, but it was nothing of, proportions of 100, 200, 300 million, which you'd used to see on big flush out days. So the question is that all the sellers wanted to do? Well, right now, they're looking like buyers are attempting to go higher here. Okay, again, the odds of this gap getting filled from yesterday in one shot are slim. So the question is this gap going to hold? So do I really want to be a buyer just because we're gapping high into a tremendous gap? Not really, even though value will be higher. Do I want to be a seller, banking about that it doesn't fill this gap? I wouldn't mind being a seller, but do I want to be a seller at 325.48 when there's still another $2 of gap? Who knows how much they want to take out of it? So I'm definitely going to let market-generated information form this morning. If we gap higher, close the gap, and then get accepted back below yesterday's high, then the odds are you're going to at least go to POC. Then I'd take a put position because you'd be back into value and back into yesterday's range. If we're to hold the gap or close it, but then keep coming back above yesterday and then start one-time framing up in B period, maybe I'd look for a call play, but I'd really have to see what kind of volume we do on the way up and what kind of tempo we have. Because again, the odds of that gap getting filled today are slim. So waiting for market-generated information is not a bad thing. Just like yesterday, you're going to get many opportunities today. And then let's go over the chart. So monthly, right? 4 days left to go in the month. Still very healthy, one-time framing up. Still have the gap. Weekly. We're now in balance. Markets don't go bull bear, right? They go bull, balance, continue bull, or bull, balance, bear. So I'm going to still call this balance for now. Okay, we'll see how we end up at the end of the week. If we can't close the gap and we end lower, I'm still going to call it balance. Again, markets it's an art. It's not a science. Some people will say we're in balance. By the end of the week, some people will say we're down because they're going to consider this the balance for those previous 2 weeks. I would probably just call it a 4-week balance or a 6-week balance if we stay within here. But right now, the bottom line is the gap is your main focus. And look, we finally broke this trend line. But we're still in balance. Daily, different story. We're down, right? We were balance, bull, outside day down, so closed below it. So I was down on Friday, and that was certainly down yesterday. Gap lower. Again, the gap is my main focus. The shortest of the 3 time frames is down. Finally broke that trend line. So has something changed? Even though there were a lot of positive for the bulls yesterday, has something changed? And the answer is yes. Question is it a short-term change and we're going to trade sideways before we try to resume going back higher? Or is it going to be something more where we're going to attract more selling now and start pushing down to those other key levels I talk about, and also you still have the 50-day and whatnot? That all remains to be seen. Opportunities will be there. Patience. Good luck trading today. Have a great day, and we'll recap at 4 p.m.